One of Australia's largest banks just cut their interest rate by 0.5%. What's going on? Let's have a look. Also, we're going to look at how you can save $69,463 over the life of your loan. Let's dive in and starting off on the top and see what's actually happened. So we see ANZ recently coming out saying that they're cutting their variable rate as much as 0.5%. It's crazy, massive news here. So we can see with ANZ, they're cutting investment interest-only loans, their variable rate as much as a further 0.5%. So they're reducing that with their other variable loans for owner-occupiers as high as 0.25%, which is a real reversing of sorts of late. We've seen a bunch of rate hikes from the Reserve Bank. The banks hungry to get new business are starting to compete to each other, and we're seeing that there's a real reduction in downwards trend now in the interest rate market game. We've seen this with St. George as well. They've done the same thing. They've reduced their variable rate by 0.1%. And we've also seen ING going by 0.15%. So we're seeing a lot of interest rate movement in amongst a bit of change. We're seeing a lot of the fixed rates increasing. But interestingly, there are talks that fixed rates might actually come down in August this month. So we'll have to wait and see what happens here. Comes at the back of more information in terms of where the market is really positioning rates for the future. The money markets are actually tipping that they're expecting the cash rate to peak at 3%. Now, we've heard reports of the markets talking about and economists predicting the cash rate get anywhere from that 3.5% to even 4.5%. But we're actually seeing a bit of a winding back of sorts where the markets are starting to bet the cash rate is going to go down. They're also expecting a 90% chance that on this Tuesday, when the Reserve Bank meets up, there'll be a 0.5% increase in the cash rate, with some actually tipping up to a 0.75%. So we'll just have to see what happens there. It will be interesting. This comes off the back of talks where inflation might actually reach a negative. So inflation could turn negative by the end of next year, with petrol prices declining and supply chain pressures easing. And the Reserve Bank might actually be able to avoid being too aggressive with their interest rates. This comes off the back of economists where there was a lot of expectations with global inflationary pressures. That's actually looking like it's now going to be more temporary, and Australia's quarterly headline inflation to be low or negative in the final quarter of 2023. Now, this easing of inflationary pressure is expected to happen next year, and this could mean that the Reserve Bank could keep their official cash rate at the estimated 2.5%, which is that neutral rate, which some economists have predicted there. Now, we saw Commonwealth Bank, they'd actually predicted that the cash rate would only hit 2.5% before we'd see that come down. We can see here, Commonwealth Bank of Australia tipped the cash rate to peak at 2.6%, with it unwinding and going backwards late 2023. We saw ANZ and Westpac come out saying that they thought the cash rate would hit 3% or 3.35 was Westpac's, and then by late or mid 2024, the cash rate to go down. So definitely some interesting headlines there. So let's jump in our time machine and see what interest rates we could get back 2 years ago. So September 3rd, 2020, we can see here Suncorp was offering variable rates at 2.68%. Now, the official cash rate back then was 0.25%. Now, fast forward to today, as we talked about earlier, you can get variable rates from 3.19%. The official cash rate right now is 1.35%. So if you got a variable rate back then, even with St. George, they're offering 2.69, Suncorp 2.68, the official cash rates that we've seen and the hikes that have happened has been a furthering of 1.1%. So what that means is if you have a mortgage and you haven't reviewed it since then, you're actually paying the bank a loyalty tax. You'd be paying 3.79% when new to bank borrowings or new to bank lendings is at that 3.19%, effectively a loyalty tax of 0.6%. What that means is you're actually paying the banks an extra $69,463 in interest over the term of the loan if you were to pay the same repayments on a $1 million mortgage as you're paying on a 3.79% rate. So it definitely pays to review and have a look at where you're at. We're certainly seeing there's a lot of upwards pressure that has happened recently in interest rate movements, and it pays to review and see if you can reduce some of those costs there. Here at Hunter Galloway, we're mortgage brokers. We're based in Brisbane. We help with people Australia-wide. So if you're needing assistance with a loan, hit us up at huntergalloway.com.au or visit us at huntergalloway.com.au, and we'll see you next time.